As our viewers are zooming in, I'm going to remind everybody that if you have questions for the Secretary, please put them in the Q&A chat box at the bottom of your screen, and then I'll answer those towards the end of our session. It's officially 1 o'clock, so I'm gonna get us zooming. It's great to see everybody today. My name is Megan Lucas, and I'm the CEO and Chief Economic Development Officer at the Lynchburg Regional Business Alliance. And I couldn't be more thrilled to be here today in Lynchburg, Virginia, working hard for our fabulous region. And we've got a really wonderful guest today who is no stranger to our region and who is indeed a friend to all of Virginia, but I think he's a real special friend to the Lynchburg region. Before we get rolling, I want to give you some updates. As you know, there's a lot going on. We are continuing to social distance, encouraging everybody to wear masks. I'm coming to you today from my remote location, and I want to show you, I've got this great new mask. It's a We Can Do It mask, and I want to believe that we can all do it and encourage everybody. Please wear your mask as often and frequently as possible when you're out and about. You know, one of the things that's so important is if we have a healthy community, we're going to have a healthy economy. And we don't want to see a reversal of what we're starting to experience. We want to keep moving forward. We want businesses to stay open. And to do that, we need to be wearing our masks. So reminder, wear your masks. There's a lot of activities, though, that are coming up digitally for you all to stay engaged, to grow your network, to continue to outreach and connect with individuals. Commerce and Cocktails is tomorrow afternoon. All of the events I'm going to talk about briefly are on our website, lynchburgregion.org, and you can register for those. Commerce and Cocktails is tomorrow night. It's a way to grow your network, to engage with other business leaders, and we will be having you'll be sharing your own. You'll be having your own cocktail from home, but we will have a demonstration, a cocktail demonstration for that. That will be tomorrow from 4 to 5. Women, Wine, and Wisdom is July 28th, 4:30 to 5:30. Regional, on July 30th, we'll have a regional healthcare for our businesses and schools, a focus on community communications, COVID-19 with Centra. And that's a really great town hall that we produce with Centra, so hopefully all of you will tune in for that. That will be July 30th. And everything, again, that I've mentioned is available in more detail on our website, lynchburgregion.org. And without further ado, it's my pleasure to welcome Secretary Aubrey Layne, Secretary of Finance for the Commonwealth of Virginia. And you, sir, have had a lot going on. And I wonder, did you ever anticipate this in your wildest dreams when you said, I would love to be Secretary, sir?
I wish I could tell you I had it all planned out, Megan, but every governor has to face some difficulties, but with this pandemic and what's been going on, it's been no textbook came with it, but so far so good, and Virginia is faring pretty well during this crisis.
Good, very good. Well, the floor is yours, sir. Why don't you go ahead and take this opportunity to brief our viewers, those that are viewing us on Zoom and Facebook Live. And I also encourage everybody, if you have questions as the Secretary briefs us, please put them in the Q&A box, and then I'll answer those towards the end of our session.
Okay, well, thank you, and good afternoon to everybody. Thanks for inviting me here today. As Megan said, Lynchburg is a special place to me. My family's from up in that area, my father and mother. So get up there quite a bit. So at least visiting some relatives. So good. Hope everybody's doing fine there and staying safe. What I thought I would do today is really go through three things. First of all, bring you up to date on our revenue situation and how we ended the last fiscal year that ended June 30th. Talk a little bit about our forecasting process, or in this case, a reforecast because of the impacts of the pandemic. And then talk a little bit about the special session that the governor has called beginning on August 18th to deal with the budget. And then there's a couple, I'm sure a few other issues that'll come up with all the events of the last month related to social justice and policing across the Commonwealth. First of all, let's start a little bit of background about our budget. We have about a $22 billion general fund budget each year. And just to remind everybody that that includes all the revenue sources that allow the General Assembly to make appropriations to things like schools and public safety and health across the Commonwealth. I used to be Secretary of Transportation. That's actually a non-general fund secretariat, because those funds are raised by, as all you know, gas taxes and fuel taxes and other things across the Commonwealth. So while those have been impacted, the most of the focus has been on the general fund and how we're able to maintain through this period of certainly economic uncertainty. So we have, as I mentioned, about $22 billion we collect each year, and three primary revenue sources. And the reason I'll go through this in a little detail, not to bore you with a bunch of numbers, but to let you know how we got here and what to expect as we go forward. But those revenue sources, first of all, are payroll withholding. Most of us work and have withholding taxes out of our paychecks. And that is the primary revenue source in the Commonwealth. Over 62% of the revenues that we get each year come from that source. Now, related to that source is another part of individual taxes, or particularly income taxes, called non-withholding. And these are the payments you guys pay the state at the end of each year, settling up your tax returns. Sometimes you do a refund, sometimes you have to pay. They're non-withholding. They're not taken out of your paycheck. And they principally come in during the month of April, although this year it was changed because of some decisions we made, which is the fourth quarter in our fiscal year, which are April, May, and June. And they make up a little over $3 billion, or about 17% of our revenue source. So just in personal income taxes, either through withholding or the payment of your taxes, make up almost 80% of our revenues. And another 18 or 19% is made up of sales taxes, where we go out and buy things, and of course we collect taxes. So those are the determinant things that for our budget. And of course, with this pandemic, all of them have been impacted. Now, just about 4 months ago, we were adopting our budget for the next biennium and finishing out the current year we're in, which ended June 30th. And we were doing very, very well. The economy was humming along. Virginia was, and still is, because they haven't named another, the #1 state in the country to do business, thanks to a lot of efforts across, with chambers across the state in that. Our unemployment rate was down to 2.6%, and we were adding new jobs with new people coming into the Commonwealth, new businesses. And so that's good news because it may help us get out of this as we go forward. But it also meant that was some strong revenue growth that was coming into the Commonwealth because businesses were doing well and individuals were doing well. But of course, that all changed about March 15th when the impacts of the COVID-19 virus necessitated, or the governor decided to start closing down the economy because of the crisis related to the spread of the virus. And that's really been our approach from the very beginning. And I think it's the best approach for business. Get the health crisis under control so that we can deal and get our economy back going in place. Because unlike other crises or other financial crises, this was not caused by something in the normal economy. This was not a slowdown or an overheating of the housing market or bad actions by banks or any of that type. This was simply caused by a health issue that caused an unnatural shutdown of our economy. And so we're not going to come out of it the same way either, because it's going to come down to confidence. People will start acting and rejoining the workforce and going to businesses and places to recreate once they feel confident. No matter if any government said we're all open today, businesses still got to win back the confidence of our citizens for them to patron them the way they did before. So with that background, this started happening. And of course, this is the first time, as I mentioned, a crisis of this nature, at least in modern times. The last was we had the advent of the Spanish flu back in the mid 1918 in that particular area, in that range, but nothing in quite a while that would give us some clue as to look to how the economy was going to react. So we looked at what a recession would do to our forecast and our budget for revenues. And that's when we announced back in about the middle of March that we expected that in the current fiscal year, we were going to lose about $1 billion to our plan. And that is, we basically were looking at April, May, and June, which is our fourth quarter. And then as much as $1 billion in each of the new years coming up in our new fiscal budget. That is 21 and 22. So that wasn't based on some political or guessing. We went back and looked at last year's forecast, which assumed a moderate recession, and that would have been the impact on Virginia. So that's when we made the announcement, that's where we got our data from. Now, there were others that felt like it was going to be much more severe than we've actually incurred. But at the time, no one knew. So we thought it was prudent to look at some history, but also take some mitigating factors. On top of that, the governor suspended all discretionary spending in the current year. We stopped all hiring, just like many businesses did in that regard. And we stopped capital projects because the idea was to conserve cash. Revenues are one side of that and curtailing our expenses on the other. So we did that in anticipation of this business closures, not knowing how long or how deep this would be. And on top of that, the federal government, which I'll remind everybody, they have the ability to print money. The Commonwealth of Virginia doesn't. But they moved their tax filing deadline from April the 15th to July the 15th. Taxes are normally due in the Commonwealth of Virginia on May the 1st. But we did not have the luxury of being able to move our tax deadline past June 30th. And that's because we are mandated by our Constitution to have a balanced budget. And so therefore, if we would have moved it past the end of the fiscal year, in addition to the $1 billion we were expecting, there's almost $2 billion of those final collections that come in that would have moved us to another fiscal year, mandating significant cuts in personnel to the state budget and other items in the face of a pandemic, not knowing what we were going to need from our health, our public safety, and others to fight the pandemic. So we did move it from as far as we could to June the 1st. And I want to thank all the citizens of the Commonwealth, particularly the accountants that had to deal with all this. I know it wasn't easy, but we were able to work through that and be able to maintain some type of fiscal discipline without having to take drastic cuts to the budget in that regard. Plus, because we would have been mandated to do so because of a timing difference in our constitutionally mandated balanced budget situation. So that's what set this all up. And as we went through the months of April and May, you probably read the headlines, we were down 25% to our budget. And so it looked as if things were not only going down, but about what we expected. The good news to that is that because of the June receipts, and that is the final collection of payments of the taxes from the previous year, we were able to maintain or curtail the amount of the deficit significantly because we were unsure of people's ability to pay, but most people were able to do so and pay this. So instead of being off $1 billion for the current fiscal year, we were only off about $236 million. Now, that's still not good news, but it's a lot better than what we expected. So a lot of it had to do with the final payment of taxes Unfortunately, that does not move forward into the current year because everybody's situation starts over. Maybe you'll sell stocks in this year that will increase your non-withholding taxes, and maybe not. So you can't count on those. That's a very volatile source. So we also took a hard look at what was happening with payroll. And you all know over 1 million Virginians have filed for unemployment. Record, nothing like that's ever happened in our history.
Yeah.
In that we still, at one point, we're up to almost 11% unemployment. Fortunately, it appears that the bottom of the current pandemic was sometime in late April or May, assuming we don't have to retrace. And so far, our prevalence rates and the virus is being controlled here in the Commonwealth. It looks like that was the bottom, and we've been able to add people back. Not everybody, we got a long ways to go, but some people have started coming back. But when we started analyzing how this was impacting us, 2 points became very clear. First of all, those businesses that were able to telecommute or were essential or related to state or federal government, they were faring much better from the standpoint they were able to continue on their business either because they were not shut down or they had the ability to maintain their business by telecommuting. And so that happened to be quite a large businesses in the Commonwealth. On the other side of that, the businesses that were really hurt were the ones where you couldn't socialize a lot. And that ended up being Main Street businesses like restaurants, the leisure industry, sports venues, bars, very, very significant to our economy. But when you looked at the amount of payroll that was being paid by those individual payroll taxes to the state, not as significant as some of the other companies. And that's not to say that's not important. But what it's saying is the nature of this shutdown because of the virus and the beginning of the reopening has favored those companies that don't rely on having crowds with them, services like the barbershops again, although they've started to open up in that regard. And it also hurt small businesses much more impactful and hurt in that way. In fact, there are about 250,000 businesses that pay us payroll withholding during a particular month. Well, 235,000 of them have payrolls of $3 million or less. And while they're significant in numbers, in terms of the amount of tax they pay the Commonwealth, it's only about 24% of what the Commonwealth's total revenues are. So large businesses like the shipyards in Hampton Roads, like Amazon, like Microsoft, those top 1% pay over 52% of our revenues. So while the state's economic impact has been terrible, and for those in smaller businesses that have been hurt, they have felt it significantly worse. Overall, the payroll impact to the Commonwealth for taxes were only down less than 3 or 4% for the quarter. And as you actually know, like the federal government was adding people because they were looking for contact tracers and things in that regard. So it's not, the news to this is it hadn't hurt the receipts for the Commonwealth. And what I would say is our economy was strong, but the social fabric beneath it was very thin. And we've got to now help those businesses get back on their feet. But those 2 factors, along with our ability to collect sales tax off of internet sales or online sales, a law that was passed a year ago, helped mitigate this for us and help knock down our expected shortfall. But that doesn't necessarily mean that our forecast going forward is going to be a lot better because, again, payroll and sales tax are the major portion of that. Even a 5%, being off 5% is $1 billion. And so what we're going to find ourselves as we enter the new biennium is that we have some cash on our balance sheet that can help us offset some of the impacts we're going to see. but our forecast is still going to be pretty close to what we thought a few months ago, and being off about $1 billion in each of the next fiscal years, maybe a little bit more than that. And I'll talk a little bit about that forecast in just a second. Now, the other side of this is the mitigating factors the Commonwealth took, stopping discretionary spending, are going to help build our cash reserves too. And along with, there was a bunch of new spending, about $2 billion of new spending in the new budget that was put on hold until we do a reforecast. So we're not spending more than we did in the previous year. And that's one of the reasons we need to have the special session once we get this forecast to actually balance our budget. So that's how we ended the fiscal year, a little better than we thought. It puts us in a little better position going forward. Now, our forecast is a process that lasts several weeks, and it's not just the Commonwealth of Virginia making up a number and saying that's the forecast and getting the General Assembly to accept it. We take the trends from the national level, our economists here at the state, and the trends for Virginia, and we first of all test those assumptions against what economists across the state and the country think about the national economy and the Virginia economy. And one of the things that differentiates the Virginia economy is our reliance on federal spending and defense spending. That tends to hurt us in times of economic opportunity, but when things turn down, it tends to shelter us. But we take those particular inputs, and we have economists. We have about 14 or 15, and we had this meeting, economists from across the Commonwealth and the country. We had this meeting on Monday, have them give us their view of where things are going. In fact, Dr. Gerald Pronte from the University of Lynchburg College is one of the economists that's on our board, and he spoke the other day his views on the economy, particularly the Virginia economy. We take those and then we refine our model with their forecast, and most of them agree with our standard forecast, which is not good. It's a recessionary, but not the complete meltdown that some people were calling for that would significantly decrease the expected revenues coming in. We then take them, we then run that forecast with numbers, and then on August the 3rd, we will invite businesses from across the Commonwealth, the Governor's Advisory Committee for Revenue Estimates. They will come in, and they're large and small employers from across the Commonwealth, and give their input on how they see the economy, and then we issue our forecast, which will be issued on August 18th to the Governor, to the Joint Money Committee, and then that is also the first day of the special session. So as I mentioned before, while it's not public, we don't expect it to change a great deal from where we announced just a few months ago. So it's going to be off, but not the total worst case scenario a lot of people had anticipated. So from that perspective, once that forecast is adopted, then the Governor and the General Assembly will have to make decisions on what items are going to be changed or cut, or whatever's necessary to balance that budget. And of course, we'll have some beginning balances to help offset that. So that will be the focus primarily of the upcoming special session, although I do expect that issues of criminal justice particularly will also be brought up by members of the General Assembly, and that will be dealt with also, although there's not been an official, well, the Governor did announce those two items, the budget and criminal justice issues would be taken up. Whether or not there are other issues, I don't know at this particular time. We're not even sure how much of that's going to be virtual or how much of it's actually going to be in person with the legislature here. So Megan, that's the good news. I'll leave it before I turn it over to questions is we ended up the fiscal year in a little better position. Yes, we're going to be impacted. And I should mention, I also believe that the localities may be a little more impacted than we are because of their reliance on sales taxes to a greater extent than the Commonwealth does. Of course, we've gotten stimulus monies in. We've gotten some of those to the localities. There may be more stimulus monies coming forward. Should we get some additional help there, that could also better our position going out. And I know there's talk in front of Congress to do that. But the good news is if we continue on this trend, we do expect a slow and steady increase in economic activity. And hopefully we've seen the worst behind us. I mentioned I've been doing this job now. This is my going into the third year as Secretary of Finance. And the first 2 years, as everybody recall, the economy was great. And I kept saying, look, it is good, but things never last. Nobody thought it was going to end the way COVID-19 came about. But just on the other side, things aren't good, but everything reverts to their mean eventually. And we will come out of this as we go forward. It's just a matter of how long it's going to take for us to do that. So, Megan, that's a briefing of where we stand, what to expect with the forecast and special session. I'm happy to answer questions on this or any other topic that anybody would like to ask.
Thank you. I appreciate that very much. You mentioned local governments. Can you talk a little bit about the CARES Act funding that local governments received, how they received those funds, amounts, and their usage, their availability, how to use those funds?
I did. And so there has been up to date, there's been 4 stimulus packages, although the one that gets the most attention is the one you're speaking of, Megan, the CARES Act, which the Commonwealth of Virginia got $3.3 billion from the federal government, $1.8 billion for general state purposes, and $1.5 billion to be used to help the localities. We had a decision to make because this all happened pretty quickly, and there was very little guidance given to the use of those monies, other than 3 general rules. One is they had to be used for the direct impacts of COVID-19. 2, they could not be used, specifically could not be used for revenue replacement. So if you lost revenues at the local level or the state level, you couldn't use it for that. And 3rd, they had to be spent by December 30th of this year. And they sent out very little guidance. So at the Commonwealth, and we were talking with other states, a decision had to be made. How would we make sure that those parameters were met without and still getting it to the localities as quickly as we could? A lot of states chose to do it on a reimbursement basis, but that would meant the states wouldn't get, the localities wouldn't get the money very quickly and would have to spend money and get reimbursement. So what we decided to do here is to do it, give the money to the localities under the same terms we got it from the federal government. We gave half of that back at the beginning of, I think it was around the beginning of June, and I have to go, but just a couple months ago, less than a couple months ago, to the localities, about 650 million, because 200 million went directly to Fairfax because they had 500,000 people and they could directly access those monies. About half of what was due to localities we sent out to them and said, use your best guidance on what is necessary to meet the federal guidelines. It was based on population, and that was the same way it was distributed to the Commonwealth. And I expect another tranche will be going out here shortly to the localities to help them with the direct cost of COVID. We're hoping that we get guidance from the federal government that allows those revenues of those CARES Act funds to be used for revenue replacement, which would greatly help all localities across the Commonwealth. But we don't have that permission yet, and so we're hopeful that'll happen. So, Megan, that's how we distribute it out. We know some of the localities have already spent that amount of money and would need more. And so that's why it is a priority for us to get additional monies out to the localities. Now, over and above those direct monies, there's monies going to education and health and all that flow through the localities, but those are direct monies that go directly to them. And I would expect within the next few days, hopefully by the end of next week at the latest, additional monies directly going to localities.
You mentioned education. The Lynchburg region, as you know, we have 2 economic engines, manufacturing and higher education. Can you talk a little bit about what's in store for higher education, and then also go ahead and talk about K through 12?
Yes, so if I had that answer, I probably would be playing Las Vegas if you could find one of those being open. But on a serious note, though, that is a very critical issue. and while K through 12 and higher education are related in some respects, that is, whether they'll be virtual or not, of course, higher education has the impact of having many students coming back from various places outside of the Commonwealth back into class. The two biggest factors there that I know are confronting higher education is, number one, how to keep their students safe and their faculty and their other employees safe. The CDC guidelines do not require a significant testing program, or they don't recommend testing be the primary confidence in terms of having students back on campus. It's very important, but they say it should be involved in compliance with or together with other things like contact tracing and symptom evaluation and those types of things. I know many of the higher education universities believe testing to be much more important in order for that, and doing it much more routinely than is called for by the guidelines. And those decisions are being worked with in the health department as issuing those guidelines. And of course, whatever that is, we will certainly help to fund that. But I know that's one issue that's going on. The second issue that impacts both K through 12 and higher ed is whether or not how much should be in class room curriculum versus online. And of course, other factors like the ability of broadband and access to the internet factor into that also. Those decisions, there were guidelines issued by the feds, guidelines issued by, I know, the education department here, but a lot of that really is up to the local school districts and the colleges. And our role is to try to support them with both CARES Act, and I'm sure those monies are also in the budget. Obviously, it's very important to us that we maintain those monies keep flowing to higher ed and through K through 12. So I don't have the specific answer. I know it varies from district to district. I do hear the governor, particularly in some of our rural areas where social distancing may be easier because there's a lower student population, in-class curriculum may be much more applicable. And I'm glad to hear that the governor has not mandated a one-size-fits-all across the Commonwealth. And so I would expect that type of response, but I do know complicating all this is the virus keeps changing, the response to it, we keep learning different things. And so I don't envy this local school districts. I know those are very, very difficult decisions, and for the universities also.
Yeah, absolutely. We have a question come in. Do any state budget projections predict a second total shutdown of the economy?
Our projections do not. And the governor was asked this question at a news conference where he said that he would take a surgical approach or a specific approach instead of having a statewide shutdown unless something drastic happened. Now, I don't want to answer for the governor, but the initial shutdown was to try to curtail it and get a baseline. We watch I know the governor does, and I'm privy to a lot of the metrics on hospitalization, on the prevalence of the virus, and we've seen it tick up in the eastern part of the state. And those actions have been now tailored to those specific areas. So while I don't want to say it will never be, I don't think that's anybody's intention is that here, including the governor's, and recognizing that we're going to have to live with this for a while. A vaccine hopefully is close, but it's probably on a widespread basis. We're still at least 6 months, and that's probably optimistic in getting it out. So we need to be smart as we move forward here. So no, our projections do not entail a statewide shutdown.
Okay, thank you. Are you pleased so far with how localities are planning to use their CARES Act funds? And what are some surprising and perhaps clever things that localities are doing with the funds that you've heard? Yeah,
I have been, and I've been very pleased. And part of that is to every locality may need a different need of how to best apply them. And that's a reason one of the things we left it to, not to their judgment, but to use their best ideas going through what the federal guidelines are. One of the things that came to my attention the other day was whether or not a locality could buy a school bus with those funds. I don't know the answer to that in that regard, but I do know if they can make a case that it's directly related to the COVID-19 because of social distancing, they can get that done by December 30th. In that regard, I would think that would be, a case they could make. I'm not saying right up here that's approved, but I'm just saying it's not for me to say that is or not is an appropriate thing to do in that regard. I think another thing is that some localities, they can share those monies with school districts. So to the extent that there's nothing in the rules that says that a town or a city or a county can't share with their school districts and over and above what the state is doing in that. So I've seen a lot of people use it for small business help that have been impacted. We could say, I know every small business has probably been impacted in some way by grants. That's certainly allowed. So would encourage those type of uses. But no, I am a big believer in getting people resources and letting them make the best decision based on the guidelines. We're not here to second guess them. If the government does somehow not allow those expenditures, we'll have to cross that bridge when it comes to. But I think everybody have been taking a very thoughtful approach to this. I've seen nothing that would not encourage me to continue to get them money to help them weather the storm.
Right. Thank you. We have a compliment for you, which is thanking you for your help with the CARES Act regarding airports. Lynchburg, the Lynchburg Regional Airport's really appreciative of everything you've done to support that. So thank you there. Do you feel it's more cost effective to have organizations that can telework do so?
I tell you, when I went back and read about pandemics in the past, in history, and of course the last one was in the early 1900s, the Spanish flu in that time frame, and what they tend to do is accelerate changes that were already going on in an economy or in a civilization. And I think two things are going to be are here to stay. The first one was already moving very quickly, and that's online retailing. That was moving very, very quickly, and now it's just been accentuated by this. The other is teleworking, and that goes along to redundancy or the ability to function your company in all environments. I read an article yesterday that said before the pandemic, only about 5% of workers in the U.S. telecommuted. Today, it's 62%. And yet most companies have not seen a very significant fall off in productivity. So I do believe that's going to be the case. I can just use the example of the Commonwealth of Virginia. The Patrick Henry building where the governor's is, there's probably a handful of people that come in each day. Most of my agencies are remote, and quite frankly, we have not lost much efficiency. Now, there's some things you just can't do that way. I know, being the former Secretary of Transportation, DMVs and having in person, that is much more helpful in that regard. But I do believe it's going to change. Teleworking is going to be a part of I know the state going forward. We may find we don't need all the physical plant we've had before in that regard. So those are two trends, teleworking and online retailing, which were already happening in great extent anyway, that I think are going to continue, are going to be actually accentuated because of this pandemic. And I'll point out, even when we get this one under control, there's no guarantee that something else won't happen that would require this. We know we're having climate change, and I'm not here to say why it's happening. We do know climate change is happening. That's changing a lot of different things. And to think that we're not going to have to deal with another virus in sometime in the future probably is not being realistic. So I do think businesses will take that into account to make sure they can function in all types of environments.
We certainly talk about, in economic development, we talk about teleworking, and the state VDP, of course, has done great working with incentives for telecommuting and companies who are interested in that. But the unintended consequences we will have at some point will impact our commercial real estate as contracts either don't get renewed, or people who are paying for buildings where no one's in them, or eventually they become more empty. So we'll have to manage that and keep our eye on that ball, because that too will affect revenues.
It will, and I used to be in the real estate business before the last 7 years I've been in these jobs, and you're right. But I would also say, and I was talking to the Federal Reserve this morning, we were on a conference call, and commercial real estate is still doing very well right now. People are adapting, and I would think that's the other thing that we always sell short. That's why I'm a big believer in capitalism and entrepreneurship. People will find a way. If we get out of their way, government gets out of their way and lets the free market work, they will find a way. It may be different than we're doing today. So yes, I do think there'll be some changes in commercial real estate, but I suspect they'll find a way to make this work for them too.
Yeah. While the governor's effort to aid renters and mortgage is appreciated, is there a conversation regarding help for businesses to cover leases and/or commercial mortgages for small businesses?
Yes, both at the federal level. In fact, I was again on this call with the Federal Reserve. They have now got in place their Main Street lending program specifically for those type of businesses. Yeah. And I really appreciate the question about evictions. We do want to help people stay in their homes, whether it's rental or owned. On the other hand, we understand the impact of businesses too, and we need to make sure that they're getting paid for this also. We just stood up the program where those payments will go not only to help those people, the individuals, but either the landlord or the lessor, excuse me, or owner of those facilities, to make sure they get paid. And of course, over and above that, there's a small business program the state's setting up. As you recall, one of the things we did in the last year's budget was we allowed the games of skill to be, the governor and the General Assembly did, to remain for another year before they made decisions. That money, approximately $100 million, will be used to help small businesses, homeless, and that type of stuff. So the answer is yes, and those programs are being rolled out. They fall under the Commerce Secretariat, Secretary Ball, but he is very passionate about that, and they're working getting those programs out.
Okay, thank you. It seems like workforce retraining will be essential to economic recovery. Do you expect that the administration will reallot funding for those workforce programs that can produce a big impact quickly, like Virginia Talent Accelerator, VGIP, and of course, Fast Forward? So
let me answer it first generally. As I went through the revenues here before, unallotting those expenditures doesn't say we can't do that, but we're going to have to find a revenue source for it. In other words, our revenues, and that was the message to our secretariats yesterday. If you want to find those unallotted items, you got to find additional revenues or something else in your budget. And we think that should be the case, because there's some things in the unallotted that should be more important than some of the things in our current budget. And I don't mean that to say anything's not important, but it's a matter of prioritization. Also, these monies that are, as I mentioned, we're going to have cash on our balance sheet for or scalable items like incentives or site development or broadband. Those are things that can be scaled, and we will have resources to help with those. And I do think, and I know I've talked with Stephen Murray about this, I will be an advocate for getting monies to site development and to incentives because they're not an ongoing. We can up them and down because we want to continue building revenues in the Commonwealth. So while I don't get to make the final decision, I know I will be an advocate for use of monies in those areas going forward. Now, it'll be up to the General Assembly and the governor, but we certainly understand that we want to maintain our #1 business ranking, and more importantly, help those businesses that have been impacted. And I think you're going to see the governor focus a lot on that over the last 18 months of his term.
I think when we talk about economic development, we are always talking about, it's particularly in our region, about pad-ready sites and site readiness. And everything gets impacted. Our localities need to continue to get their sites pad ready, and they're doing the best they can. But as revenues are down, again, things have to get prioritized, and then those sites may not get completed in a manner we need them to be. We are anticipating post-COVID some reshoring and some growth coming in the supply chains that support the medical, the bio, and pharmaceutical fields. So I certainly appreciate that. We have a question that's come to us from Facebook. I'm going to read that, sir.
Okay.
What is the suggestion for single income providers with children in grades K through 12? Given the current plans from schools, it's very restrictive and unfortunately does not seem to allow for full-time employment without the current option of before or after school programs. If one doesn't have family, for example, to care for children, they're learning virtually or an abbreviated schedule from the schools.
No, very, very good question, and one I don't know that I have the answer to totally, because also, and that is the ability for childcare. Many of those have not reopened back up also, although that is a program that we've made a priority. My wife and I, our children are grown and we don't have any grandchildren facing this, and I know it's a difficult decision on families in that regard. We were talking just amongst ourselves what we would do, and not sure I know the exact answer, although it's going to require some type of sacrifice. I mean, the options are, if you had the resources to be able to have somebody come in to pay for that. Most people don't have those resources. I saw an article today, families are putting together what's called pods, working with neighbors, where they're alternating, having a group of families working together, whether it's through the telecommuting or at-home schooling in that regard. So I don't have an answer, Megan. I wish I could do the caller and tell her it's a difficult decision. I do know it's not only an economic one, but one of quality of education for their children. I don't have a specific answer other than I do know those are very much on the minds of the Department of Education and the school districts working on how they can do that. A big part of it is, the only thing from my perspective, broadband is going to be helpful, whatever that answer is, and hopefully we can get some significant investment in that.
I will tell you, thank you, Mr. Secretary. This morning we had our business at breakfast, and we had all the school superintendents for the region, and they went over their plans for opening and the hybrid models that they're working on. And for the individual who posted that question, that breakfast this morning will be available on our YouTube channel. And some of the schools are addressing that very question. Childcare is an issue. It's an issue for before school, after school. It's an issue for parents working remotely. And some of the schools in our region are trying some solutions for that. So definitely reach out to your school district and see if they're making plans to support. And the last question, I know we've gone over time, but I'm going to go ahead and ask this last question. What do you expect the fiscal impact will be to any police reform that may be passed in the August session?
Yeah, I don't know. And we had a discussion preliminary on this. It depends on what gets actually introduced. Well, I think the governor has made publicly that, I know people are talking about defunding. I think from his perspective, it's more a reassessment of how funds are deployed. In that, I don't think there's any question that police while maybe there's some changes that be made, they are valued people in our communities and are necessary for our social life. So without seeing the specific amount of the legislation, but I know education in terms of training and those things have been talked about. Whether or not they're going to change the duties, I don't know. But of course, if they do, they have a fiscal impact, then that money's going to have to be found in the budget, and that may require an offset somewhere else. So I'd like to answer your question specifically. I just don't have that in front of me. But I suspect it's not going to be free.
Right. Okay, one final question came in, and this is it, I swear. How do
Okay.
you think that COVID would affect new entrepreneurs just starting out that want to be revenue creators for their community?
Yeah, and that's why it's important for us to continue helping these type of ideas getting forward, because I know, for instance, in commerce this year, we reinstituted what we used to call the Virginia Research and Investment Committee, VRIC, into now a partnership for this very purpose. And those monies were not unallotted. Those monies are going to be there. And so this incubator working, I know Virginia Tech has been a big part of this, working with the colleges across. That is still funding. And I would encourage people to get those details, but primarily working through the educational institutions that are involved in that effort. But we certainly understand we cannot stop investing in our current businesses and new ideas for businesses.
Absolutely, absolutely. Thank you so much. I really do appreciate your time today. We're getting great comments both on from all the platforms. You are always so appreciated by this region. We appreciate that we can approach you and call you at any time. And we really appreciate your assistant Gigi for helping coordinate this call today.
I'll tell her.
Yes, please do. Everybody, I want to remind you that this webinar, or this Wednesday at 1 webinar, will be available on our YouTube channel should you want to review it or share it with friends and family. Remind you there are lots of opportunities to engage and grow and impact your network for business growth and success at the Lynchburg Regional Business Alliance. Just visit our website at lynchburgregion.org. And regarding entrepreneurism and business startup, remember that we have this, are proud to host the Small Business Development Center for the Lynchburg region at the Alliance. Stephanie Keener and the team do a dynamic job helping entrepreneurs and startups through the critical process. It certainly can be done during COVID, so now's a good time to be working on your business plan and charting a course for your future. On behalf of the business community and the board of directors, thank you everyone for tuning in. Secretary, it was great to see you. And I remind everybody, wear your mask. Just put it on whenever you can and go about your business. Let's see yours. Show me yours. Yay.
Keep mine in my pocket all the time.
You got to have it. Have a great day, everyone. Thank you so much.
Everybody. Thank you.
Thank you.